point of time, each and every nations in this world are looking at the war happening between Russia and Ukraine. Most of us retail traders are really worried about our portfolios. Whether I have to hold, I have to sell, what I should do in this current situation. How this war is going to impact on my portfolio. In today's short video, I'll be talking about the impact of Russia and Ukraine war on Indian stock market and how a retail trader has to react for the ongoing situation. Myself, Vinay Shetty, I am a passionate trader and coach from the Trading Minds. So what is the impact that is happening on the stock market of India? So most of you have already witnessed that the Sensex has fallen from 58,000 zone to 54,000 zone. The Nifty came down from 17,800 levels to 16,200 levels. The Bank Nifty came down from 38,000 to 35,000 zone. Right? And all these things are happening in just few trading days. So what are the other impacts? So already we have seen the rise in the crude oil prices. Already we have seen the rise in the gold prices. So for a country like India, the rise in crude oil prices is not a good sign. The rise in crude oil price will impact on most of the stocks, most of the sectors. In fact, the rise in crude oil price will affect the cost of living. The cost of living will become expensive. So these are the various places where the war is affecting. Now, what should a stock market trader should do? What should a retail trader do? Whether he's a long-term trader or he's a short-term trader, how he has to react for the ongoing situation. If you are a short-term trader or if you are a daily trader, this is the good time for you to make the money if you know the technical analysis, know the levels, if you know the technical analysis. So this is the time for you to make the quick money. Proper risk reward, with the proper risk management, with the proper money management, definitely this is the time for you to make a good amount of money. As a long-term trader, what I should do? As an investor, what I should do? Because most of the newbies who entered the stock market during the post-pandemic period have seen a lot of multi-baggers. Whatever the stocks they have touched, whatever the stocks they have bought, they have turned as a multi-bagger. 3x to 10x increase in the price. But now they are seeing the sharp fall. They are seeing their portfolio is bleeding red. So what they have to do? How to analyze this situation? So answer for this is the time for reassessing your portfolio. So this is the time to square off all bad stocks. This is the time to sell those bad stocks. So how do I do that? How do I know which stock is bad? How do I know which stock is good? So for this, the answer is simple. It's all about the fundamental analysis. So you have the access to moneycontrol.com, you have the access to the screener.com, right? So just visit there and check for the promoter's holding. What is the promoter's holding in the particular stock which you have bought? What is the book value? Is the book value doing good? Yes, that stock is good. What are the assets? What are the liabilities? What is the performance of that particular stock in the previous quarter? Check for the sector performance or check for the impact of this war on that particular sector. Once you are done with this fundamental analysis, you will come to know which stock is good in your portfolio and which stock is not. And this is the time where you are getting very good quality stocks available at the discounted price. Check for those quality stocks. Pick the sector, check for the quality stocks. Check the book value, check the PE ratio, check the ROCE, check the ROE, check the promoter's holding, check the performance in the last quarter, check for the assets, check for the liabilities. So this will help you in identifying the good stocks for the upcoming years. So what can be expected? So at this point of time, the war is almost coming to an end. The Russia, it's a very big nation, attacked the Ukraine, which is a small nation, and the war is almost to the end. So what is expected? What could be the outcome of this? For sure, this will impact the economy of the world. This will impact the economy of each and every nations. Those are involved in the export and import of various factors, So which sector that I have to look for? So now question comes, which stock I should buy? Which particular sector I have to look into? As I said, there are so many good stocks which are available for the discounted price. If you want to trade safe, if you want to invest your money in a safer way, definitely you have those Nifty 50 stocks. You can go and you can invest them. And most of the stocks are available at 5 to 10% discount. Right? And now with few fundamental analysis checks, like as I said, the promoters holding, the ROCE, the ROE, or the PE ratio, or the sector performance, or the recent quarter performance, definitely you can look for those good stocks, and this is the time for you to add those stocks into your portfolio. And what can be expected from this war? So what can happen in the upcoming days? At this point of time, the war is almost coming to an end. Post-war things will be definitely affecting the market things, like in 2022 is going to be more dynamic and more volatile. You have to choose your stocks precisely. You have to check for those stocks which are having less impact from the ongoing situation, and you have to bet on those stocks. And also you have to check for the sectors. You have to check for the good stocks from those particular sector and have to invest in them wisely. Which sector is going to be a good bet at this point of time? So if you ask me this question, the answer from my end, it is chemical sector. If you are able to identify a good stocks from the chemical sector, so it is definitely going to be a good bet in the upcoming years. So this video about the ongoing situation, on the ongoing crisis, and how you have to react. So hope this video is helpful. For more learning contents, do follow us on all our social media accounts. Stay connected for more learnings. Thank you. Bye bye.